I'm Emmitt. This is your Real Estate Minute.
All right, my name is Junior Simmons with Atlantic Home Loans.
Say, what is your take on down payment assistance, and what programs do you guys have that's compatible or comparable to the down payment assistance?
I think down payment assistance is a great tool to help borrowers to get into a home, but there's things that they have to, there's guidelines that they have to meet. For example, a 640 credit score and the debt to income on a FHA loan cannot be over 45%. On a conventional, cannot be over 50%. So we have to look at the overall picture of the borrower and make sure that they have enough income to support the payment and not too income to be eliminated from the program.
Orange County, I think it cuts off at what, $200,000. So with the purchase price of $200,000, our medium home price is being around like $235 right now. Knowing that the medium home price is above.
To be honest, and I want to be very blatantly honest,
okay.
You probably know that, I'm not a big fan of Orange County down payment. The reason why it takes too long, and it doesn't, I said the medium price here is $240, it's in $200 maximum that I can do. No? But there's other programs out there like the Florida Bond, and that will give the borrower the down payment to get into the house. The interest rate may be a little bit higher on FHA and a conventional, but because of the lower mortgage insurance it gives on a conventional, it kind of equates out. And so most people get through pretty quickly using the Florida Bond, which now gives you $7,500 that you can use towards your down payment and closing costs. On top of that, if you go conventional, and borrowers doing a $300,000 loan can actually get $9,000 as a grant, and it's not repayable.
Okay, and this is the programs that you guys offer.
Right, yeah.
So, okay, so in comparison with the down payment, with the Orange County down payment assistance, the purchase price limit is $200,000. The DTI on the FHA is 45%.
Right.
Credit score is 640 or better. And then the program that you guys have that's comparable to the Orange County would give us a purchase price up to $300,000.
Oh, $210,000 on a conventional loan.
Okay, $310,000
yeah.
on a conventional loan.
Right.
What about FHA?
FHA will go up to probably I think $280, $290, somewhere around there.
Okay, $280 to $290. And then how much down payment assistance they can get?
$7,500 on the FHA.
$7,500 for FHA?
There are two options on a conventional. It can be $7,500 or it can be a 3% grant. So whichever is most beneficial to the borrower.
Okay, so we got a $7,500 or a 3% grant, and that's on the conventional.
On the conventional.
The difference between down payment, or I guess it's not a big difference, but the grant is they don't have to pay it back.
Yeah, the grant. You just don't pay by the grant.
Okay.
And say, for example, on a we divide between conventional and FHA. If, say, for example, you have one spouse in the household on a conventional earns $80,000, the other earns $65,000. As long as that person does not go over like the $83,000 threshold that's on the loan, they're still qualified. Because we look at the income on the application, not the household income.
Okay.
FHA, we look at the household income.
Okay. So FHA, we look at the household income, and then conventional, we only look at the applicant income.
Applicant income, right.
Talk a little bit about your investment loans.
We have an investor loan program. We have several of them, Where, so for example, with investors, one of the problems that we have with self-employed people, is that they write a lot of their income off.
Okay.
So we have a couple programs that kind of allow us to put a borrower in a home by using, for example, 12 months bank statement.
Okay.
And I looked at one yesterday. The guy had like a 680 score. We're doing 12 months bank statement, 20% down, and his rate was just in the 6.
Okay.
So that and there's no mortgage insurance premium or anything like that. If you have a 720, we can go up to 85% rather on that program, and that's for primary resident. We can go down to like a 500 on some of these programs.
Okay, so on this 12-month bank statement, we can go down to a 500.
The rates get higher though, and the LTV get lower as the scores drop.
This is only for investment.
No, this is for primary.
This is for
So if you run to somebody who say, for example, hey, I own a restaurant, I declare 20,000 a year, but I can show that I'm depositing 20 or 30,000 every month in my account. You can actually take 12 months bank statement and use those as income. So that's one option. For investor, if you run into an investor, whether self-employed, yes or no, and they have the money to put on, we don't even have to look at income. You know, we can do what they call a no ratio loan. And one of the biggest things that we're seeing too is someone goes out there to look at a property and the house needs some fixing up. Now, one of the programs that we have is what they call a renovation loan. And we have two types of renovation loan that we do now. We can do conventional renovation or we can do FHA renovation. So say for example, somebody, you find a perfect property, you need to add a pool, you need to do the kitchen, you need to do the roof, etc. As long as the aftermarket value, the after repair value is there, you can actually loan on that for you to do a renovation on that property. And that has to do with, so for example, if you own a home already, and you say, okay, you know something, I need a new kitchen, I need a new roof, etc. I've got enough equity. We can actually come in and do a renovation loan for you and have you put those things in.
All right, now, so a renovation loan, is it comparable to the FHA 203?
Well, I mean, yeah, one of them is the FHA 203K. And the other one we have is a conventional, home style renovation that we can do too.